And as we just discussed, global markets were rattled by news that euro area officials would tax bank deposits in Cyprus as part of the bailout. And this marks the first time that depositors have been asked to contribute to a financial rescue plan during the long-running Eurozone debt crisis. Joining me to discuss the impact of this are Vidak Radonjic, the CEO of Beryl Consulting Group, and Henley Smith, Chief Investment Officer at Commonwealth Asset Management. Gentlemen, thanks for joining us tonight.
Thank you.
Good evening, Michelle.
Let's focus on the U.S. markets. They started off the day reacting strongly to the Eurozone crisis, but they did recoup most of their losses and still ended in the red, but managed to make up some of the ground lost. Do you think that the Eurozone crisis rearing its head or the Cyprus bailout is just a hiccup in the rally, or can this rally still sustain?
Well, I think the U.S. equity market still can rally here. It might pull back a little bit. I think most market analysts and participants are looking for a pullback here from a record run we've had. But I think, again, U.S. equities, it's been a kind of a no-choice rally. There isn't really much to do. So most investors are being funneled into that market.
Do you agree, Vidak?
I agree with Henley. I think that we all know what quantitative easing did for the market. We all know that this bull market is on weak legs. And we all know that once the gross margins and net margins of the companies which are historical highs will start to deteriorate, which is mean reversion, we will also have an exit strategy that is going to be in the headlines very, very soon. So the bull market, is it sustainable? I really don't think so.
So you don't think the bull market is sustainable? Henley saying that so far U.S. equities are the lesser of all evils, and at the moment nowhere else for investors to go.
Well, U.S. Treasury market is the most overpriced market in the world. As a Treasury manager, I certainly believe that. And then we're getting some bad news out of Europe again, which we saw as really a chronic disease that was manageable. But again, some ugliness rearing its head here. So I think, again, investors get spooked, and there's really not much to do. I mean, I think we would all agree that the high-yield market here in the U.S. is overpriced as well. So I think investors are going back to those solid stocks, dividend-paying stocks, good franchises, solid balance sheets, and I think that that's what's really been fueling the U.S. markets here.
Now, the deal with Cyprus, what really has people concerned is that for the first time, deposits by normal people in the bank could be levied at about 6.7% for under 100,000 euros, about 9.9% for over 100,000 euros. The concern is that this could be a precedent for future type of bailout deals. Do you think it could be if this goes through? Vidak, you're shaking your head saying no way.
I think this is just a specific situation because we all know what Cyprus is.
What is Cyprus?
Well, what Cyprus is, 30% of the deposits belongs to Russians. But it doesn't belong to Russian people. It belongs to oligarchs, people with lots of money, right?
So it's a soft target?
So Germans are basically trying to go after those guys and say, you guys should also pay for this because you've been making money in stock market to the Russian oligarchs, pretty much. So this is a purely political situation. It has nothing to do with legality because it's absolutely illegal to take money from people who has less than 100,000 in deposits.
So you're saying it's a soft target because the majority of funds in Cyprus belong to wealthy Russians.
Absolutely.
So
yeah, it's very simple.
You're not thinking that Spain is going to follow suit, perhaps Italy?
No.
Again, I agree. It's all political, and it's I think it was a trial balloon that kind of fell flat very quickly. And again, it sounds like the regulators are kind of dialing it back a little bit. But I think the concern is here that it just shows that regulators and policymakers will do anything to lessen the burden of this bailout that everyone's going through. So here again, you have an asset class or a savings vehicle that's being attached to or attacked. And I think investors are very concerned about that. Does it open a door that can't be shut again?
Yeah. Another thing that is important is all relative. Everything is relative. When you're trading markets, it's all relative. You know that very well because you're a bond guy. You trade bonds and volatility. So in this instance, the size of deposits is huge compared to the economy in Cyprus. And then when you look at Spain and Italy, the size of deposits is...
But what does this do for investor confidence if regulators can come in as you were saying...
It's very bad. I mean, what they did is basically they were protecting the over 100,000 deposits, and then regular people have to basically bail out the system in a way.
Will this have ramifications on the European bond market?
Again, if it plays out to the way it sounds like today, absolutely. And I think what investors will do will just flee that economic zone.
Into U.S. equities and into U.S. Treasuries.
Absolutely. Well, yes, Treasury, you saw that a little bit today.
Right.
Again, where U.S. Treasuries were a bit up. I mean, they've been selling off the last couple of weeks in response to the U.S. rallies. U.S. 10-year was back over 2%. That rallied back under 2% today. So again, a risk-off trade in the U.S. markets today.
Spanish and Italian 10-year bonds, the yield also went up. Not much, but it's deteriorating. But that's all natural because they went, again, I definitely believe there is a mean reversion here, and the market will take care of its natural things.
Okay, well, we'll see how this plays out. The current agreement is still being under review, but it may be reduced to 3%. Either way, it does look like there will be some kind of tax levied on bank deposits. Thanks very much, Vidak Radonjic, CEO of Beryl Consulting Group, and Henley Smith, Chief Investment Officer at Commonwealth Asset Management.